focus on the bootcamp. It's day 2, and day 2 is risk management. So risk management is something that I really want to highlight. It's very important. This is what can make or break you as a profitable trader. This is what can determine if you become if you are a profitable trader or not, or if you are going to become a profitable trader or not. So risk management, how to manage your risk. This is definitely one of the first thing and most important things you should learn as in your journey as becoming a trader. So yesterday what we went through lot size, and we went through pips, we went through what broker is, and so on. And before we start today's lesson, I want to I want to recap on what we talked about yesterday. So let's do that. Let's recap on lot size and pips. What is pips? Pips is points in percentage. It's how much the market moves, the steps the market takes on the vertical price scale that you see here. And lot size, your lots that's how much you bet into each and every movement, into each and every pip the market moves, into each and every step the market takes. And how do you count pips? Well, most often it's the fourth digit. It's the fourth digit on the scale. Or you count it even easier. It's the fifth digit totally. So in this case, we have GBP USD. And on GBP USD, one lot. So let's say, okay, so the price now is about 121.44. 1.2144. So one lot in this case would be, if the price is 121.44, your one lot is not the 1, not the 2 after the comma, not the 1 after the comma, not the 4 after the comma, but the fifth digit. This one. This would be the pip. This would be 1 pip in this case. So if the market moves from 1.2144 to 1.2145, it has moved up 1 pip. If it moves down to 43, sorry, it has moved down 1 pip. All right. So this will represent 1 pip in this case. To bring another example, let's look at Euro USD. Same thing. Let's look at Euro USD. Let's remove some of these drawings. What is 1 pip? Let's say the price right now is 1.0737. Okay, so where is the pip? 1 pip is the what? The fifth digit. So it's not the 1, not the 0, not the 7, not the 3, but the 7 here. So if it moves from 1.0737 to 1.0738, it has moved up 1 pip. That is 1 pip. So now when you understand what pips is, then you understand how your profit increases and decreases when you're trading, because lots is how much you bet into each and every pip. So the smallest lot you can use, let's see if I still have my drawings from yesterday, my notes from yesterday that I did with you guys. Yes, I have it. All right, so the smallest pip, the smallest lot size is 0.01. It's called a micro lot. And a micro lot is 10 cents per pip. So for every pip the market moves, you make or you lose 1 pip. 10 cents. The next lot size is 0.1. That's $1 per pip. So for every pip the market gains or loses, you win or lose
1 US dollar. Now, then we have a standard lot, which is 1. And one lot size 1 is 10 US dollars per pip. So when the market gains 1 pip, you make 10 US dollar. When the market loses 1 pip, you lose 10 US dollar, depending on if it's a buy or sell. All right. Now when we have repeated that, and now when we understand that, and please, if somebody doesn't understand it, let me know in the chat box, and I will repeat it for you. Why I say that also is because it's so important that you guys understand this. You cannot trade, doesn't matter if it's signals, if you're trading with an EA or whatever it is, if you don't understand risk management. And to understand risk management, you need to understand what pips are, you need to understand what lot sizes is. So you understand how much you're risking to each and every trade you're making, okay? Now, when we understand this and we got this out of the way, let's jump into risk management. Now, risk management, what is that? It's very simple. It's how much you are willing to risk into each and every trade. So how much should you be willing to risk to each and every trade? Well, the standard that I recommend is 1 to 3%. You don't want to risk more than 1 to 3% in each and every trade. And as a beginner, I would say as a beginner with a live account, start with risking 1% per trade. So what is 1% per trade? Let's say you have a $100 account, 100 USD account. 1% out of 100 USD is, of course, 1 US dollar, right? So that means in each and every trade, you don't want to risk more in your stop loss than 1 US dollar when you're trading a 100 US dollar account. How do you calculate that? How do you understand if you're risking 1 US dollar, if you're risking more than that? Yo guys, sorry, I'm back again. My streaming software cut off. It does so sometimes. I have to check into that. So we're talking about risk management, all right? And as a newbie into this game, maybe it's your first live trading account with your first real live money trading, then you don't want to risk more than 1% per trade. If you're more risk averse, let's say 3%. So it's 1 to 3% per every trade you are taking. Now, how do you know if you're risking? How do you know how much you are risking per trade? Simple. I will show you guys. So this is why we need. It was so important for you to understand what lot size and pips are. All right. So let's say you are trading with lot size. So if you have a $100 US account, you're trading with a lot size that is 0.01. Now a lot size 0.01. What is that? That's a micro lot. We already spoke about that. Micro lot. So, and that is 10 cents per pip. So it means if you're trading with a lot size 0.01, you gain or you lose 10 cents per every pip the market moves. So if I call it a trade, let's make a very easy example. Let's do like this. Let's jump into USD JPY, and now let's go to Euro USD. Let's clear our drawings so you guys see what I'm talking about. Let's go to a smaller time frame, even smaller. Okay, now let's say that we are going for a buy here.
It actually looks like it's a sell coming up here, but let's say we're going in for a buy here, okay? And we are putting a stop loss that is, let's say we're putting the stop loss here. That's like a normal place to put the stop loss, and that's like 30 pips down. How I know that? I look at the number here. You see this number here? So I know that this stop loss is 30 pips down. Take profit. It can be whatever. It doesn't matter in this case because we're looking at the risk. And the risk is your stop loss. It's how much you're willing to risk per trade. Risk management is how much you're willing to risk per trade. So you have a stop loss of 30 pips. Now you are trading with a lot size 0.01. Lot size 0.01. What does that make? We're trading 10 cents per pip. That means if we have a stop loss, if our stop loss is 30 pips, then how much are we risking on this trade? If our stop loss is 30 pips and we are risking 10 cents per pip, how much are we risking on this trade? We are risking $3 US, right? So we risk $3 US on this trade. Now, how much is that? If you have a $100 US account, $100 US account that you're trading, how much is that from your account? That is 3% from your account. So that would make, so just to put it very simple, if you have a $100 US account, USD account, and you want to know what 3% from that is, you divide it in 3. No, sorry, you don't divide it. You what if I can say that in English? You multiply it with 0.03. Sorry, my English be off sometimes in the morning. I don't know, need more coffee. So you multiply your $100 US account with 0.03. That is 3%. And what you get from that is 3. Which means that your the risk that you want to take in this trade is maximum $3 US. So if you're trading with a lot size 0.01 and you have a 30 pip stop loss, that will be $3 US. All right. So if somebody doesn't understand this, please let me know in the chat box so I can explain it again, because it's very important that you guys understand this. Recap. You're trading $100 US account. You have lot size. You use lot size 0.01, which is 10 cents per pip. You are looking at a trade with a 30 pip stop loss. 30 pips times 10 cents are $3 US. What does that mean? That means that you are risking $3 US per trade. So in this case, you are on the maximum level of risk that you want to take. But you're still within the range of 1 to 3% risk. Like that. Like that. And that is, ladies and gentlemen, very short, and like that describes very short what risk management is. Risk management is how risk aware you are. To understand risk management, to understand your risks in your trade, you have to understand your risk you're taking in each and every trade. That is very important. So risk management is how risk aware you are. You have to understand how much risk you are taking in each and every trade you are taking. And to understand that, you have to understand what lot size is, what pips is. Lot size is how much you are betting into each and every pip, into each and every step the market moves. And pips is exactly that, is how much the market moves. And you count that in pips. And when you are placing your trade, you always want to have a stop loss, and that stop loss, in that stop loss, you will see how many, you have to count how many pips your stop loss is. So in this example, we saw that the stop loss is 30 pips. If the stop loss is 30 pips and you are trading a $100 US account, you want to use the minimum lot size, which is the micro lot size 0.01, and that makes so that means you are betting 10 cents into each and every pip the market moves. If you have a 30 pip stop loss, that means you're betting $3. You're risking $3 into this trade. So if the trade goes in the wrong direction and you lose, you have lost $3. If it wins, well, that depends on how high up your take profit is. But let's say it's here somewhere. So let's say it's at 70 pips. So that means you are risking $3 to win $7 US. All right, that's the risk to reward. So you are in this trade risking $3 US to win $7 US. Or if you want to count in the pips, you're risking 30 pips to gain 70 pips. That gives you a 2.35 risk to reward ratio. Now,